Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, coming out of Singapore. Now, Vishnu, great to have you on the show.
Always good to be here, Brian. Thanks for having me.
Now, Vishnu, we're going to take a look first at regional stock markets, crypto markets as well. But for a start, Bitcoin is at 19,105. It's down 1.15%. Ethereum is at 1,288.96. It's down 1.74%. Now, looking across to regional equity markets, first of all, China markets are closed for Golden Week holiday, as is South Korea. So basically, we're left with the SGX, which is down 0.39%, Bursa Malaysia, which is down 0.21%, the AXS All Ordinaries is down 0.29%, the Nikkei is up 0.63%, and that's it for the markets that are open across the region. What's your thoughts on the performance in the first half of the day, Vishnu?
I think, overall we can suggest that there's caution in the markets. We did have US markets closing in the red. Not the most brutal of falls, but certainly, a lot of caution in the market, and that's spilling over into what's a fairly quiet open as well, given what you just mentioned about the Golden Week holidays, so on and so forth. So I think we can lay out a few themes here. One is, I think markets are on the FX front, reassessing where the dollar ought to go, because we had a hugely volatile session last week, sterling crashing and then recovering back quite a bit of ground, which means that the dollar index is slightly softer on the week, although very different whether you look at it from the sterling and euro perspective, both of which are slightly higher, or you look at it from the perspective of commodity currencies, which are actually weaker. So the dollar is a dual phase thing, and so markets are trying to figure out where it ought to go. Also, adding to that context was last week PBOC's jawboning and threats against one-way depreciation bets in the renminbi. So markets may be more cautious about extending that bullish dollar momentum, but at the same time, they're not abandoning it or forsaking it halfway either. So that's one aspect of it. The other is, last week we also had much higher inflation come out in the Eurozone. So markets will be digesting that, seeing how the ECB will react to that, what that means for the Fed ECB divergence, and more importantly, how that translates into euro-dollar dynamics, because a more hawkish ECB need not necessarily be a stronger euro, insofar that the trade-offs for the ECB are sharper, given that it's a much higher cost to their growth. And I think finally, one of the other things that markets are watching are for things that are moving this week. End of the week, we've got US labor market numbers, the job market numbers coming up. That may add to the narrative of a hawkish Fed doubling down. And so you can see a revival of higher rates, higher dollar, some risk off in the markets. Midweek, we've got the OPEC Plus meeting where, the whispers are that they're going to knock off 1 million barrels per day in terms of production. That could see oil prices go higher despite recession risks, which means the dissonance in the market and the dislocations can also get worse. So this is where markets will be scratching their head, wondering how to go about it. And tomorrow we've got the Reserve Bank of Australia that's meeting. Last month when they met, they did a 50 basis point hike, although they came out to say they probably need to dial back because of the balance of risk, particularly the housing market. That's the elephant in the room when it comes to risks for the RBA. Too higher rates means there's a knock on the mortgages, household balance sheet, banking balance sheets, and that's the biggest recession risk for Australia. Markets still betting on a 50 basis point hike this time, partly in response to the Fed, partly in response to higher inflation and price shocks. But our sense is that, we're just sticking our neck out there and saying, hey, you know what, maybe they're going to do a calibrated 40 basis points instead, to just bring home the point that they want to gradually dial back. So now dialing back may not mean stepping down to 25 basis points, because it could entail a lot of unwelcome volatility in the Aussie dollar. Instead, they may do a glide path where they do a 40 basis point and say that, look, we're still doing upside, but just calibrating it, because there are costs that are attached to this, and one of it is the housing market risk. So a lot for markets to watch. in what's a quiet week, and I think they're still trying to figure out which levers result in what kind of reflexes in the various parts of the markets.
Now, Vishnu, one thing I've got to ask you, particularly because you work for a Japanese bank, the policy divergence with the Bank of Japan, and how is this going to play out, particularly in the light of the fact that the recent numbers this morning, the headline index for the Tankan survey came in at 8, which is a decline from a previous quarter's reading of 9, but the expectation by economist poll was actually 11. So that's quite a big divergence. What are your thoughts on this?
Well, I would say that in this case, BOJ Governor Kuroda is validated in his view, which is a very diametrically opposed view to the markets, and the BOJ needs to join in the fray, where he stood his ground, and so his views are validated to some extent. That perhaps cements the consensus that the BOJ is unlikely to fall in line with the global chorus of central bank tightening. So not just yet, not at this point, and maybe not even until early next year. And to your point, which the real big kahuna here, which is the policy divergence is going to be exacerbated in that case, which means dollar yen will be pressured upwards, or in other words, yen could face further downward pressures, which is why after the recent interventions, which were really the kind of high roller type of interventions, markets are pretty cautious, and that explains why the yen hasn't moved very much. It's stuck quite close to the 145 levels for the dollar yen, just below it. Markets are not trying to push the envelope on this one, but as USD yields continue to rise, and if we see the dollar rising alongside it, then I think there would be some pressures that start to build up. I think one factor that might be helping the yen stave off a higher or higher pressures may be the fact that Japan is perhaps moving a little bit faster and reopening tourism, and that's going to translate into inflows and shore up the yen a bit. But in the meantime, OPEC plus cutting production is not going to be good news for Japan, which is a huge energy importer. So higher energy imports are not going to be good news for the BOJ trying to fend off excessive yen weakness.
Now, as always, Vishnu, great insights. Thank you very much for your time.
My pleasure, Brian. Thanks for having me.
We've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.